Hey guys. All right, let's look at the dollar index. Okay, I really want to show you guys the power of how we've been bamboozled in basically having faith in the dollar. And so you hear a lot about, hey, Bitcoin drops in price a lot, and it's impossible for it to be really truly a currency. Um, and for the most part, that is true. But let's look at our own currency. So this is the dollar index, and we're going to go back to 1986, and we're going to measure all the way up to 2008. All right, and we're going to look, and we're going to see how much value have dropped since then. So we're going to go here, and we're going to pull it all the way down to here, which is right here around 2008. So I'm just going to stretch it out to the side. And what do you notice? Okay, we see a 45% drop. So what this means is, I was born in 1983. So now, yes, the dollar's been around longer than that. However, uh, this is on this particular chart, it says 1986, which means that this particular market, all right, um, allowed the dollar index to be traded. So in 1986, this particular market allowed it to be traded. There may be some other charts out there or some exchanges that allowed you to actually trade the dollar index before 1986. I just don't have information to that right now. So we're just going to stick with this. But we can see clearly from here down to here, we have had, and I go and look, sorry. So from here to here, we had a 45% drop in value. Okay. Now we have recovered nicely. And from 86 about to now, we're at a 25, between about 25, 26, give or take, percent drop. So we have recovered. Okay. In fact, here's the recovery rate. We're about at a 35% somewhere in there from growth from these bottoms. Okay, but if you look at the index, we're still down. Okay, so that's something to keep in mind when we think about value, and we clearly can see that this over time has dropped. Okay, all right. Let's look at some key little things. All right, so we do have a nice little rally up. We could possibly be seeing a we need to monitor this area because we at market structure. And why are we looking at dollar today? It's because it's a safe haven asset, and if we're talking about war, all right, this is going to be key. So these are the key levels that are in yellow, and what we expect is I want to see this level broken. If it is, we can expect that we can come back up into this area. If the dollar is strong, you can expect that you will see some weakness in Bitcoin and some of the other assets. Reason why? War, people want to go into safe havens. So some of the most safe havens in the world, you got the U.S. dollar, you got the Japanese yen, and you also have the Swiss franc. All right, so we're gonna look at this Swiss franc too, and we're gonna see if we see any bullishness over there. So I haven't looked at the chart yet, but let's see if we can see some bullishness over there, and if we do, that's gonna be a great telltale sign that there some bigger players in the market know that something is happening, something is coming. All right, so we have to be prepared. So I'm gonna get ready to go over and look at the Swiss franc as well too. All right, so I'm on a daily chart. We got the Swiss. I'm sorry, the Swiss franc, and I'm doing it based off the euro as well too. So we got some strong green candles. All right, uh, showing some strong bullishness. Look like a flat pattern probably will occur here. Um, if I was trading this, I would love it to even come back into this area right here, because this has not been retested. So this looks really good for some upside potential for this particular pair. Of course, we need to get over this area for the time being. Got some resistance there, but nonetheless, of course, we got some support right here. But so let's do this right here. All right. We could see some upward momentum, because remember I said if this thing is bullish, somebody knows something is going on. All right, here we got our confluence levels in place. Boom. This is what we're looking at. We're looking for a price to get up into this area here. We can see how many pips it'll be from here. It's only 34. We're talking about to the top, about 72, 73 pips. And if we could take it, if we get a retest here all the way up, we're talking about a 112 pip move. So that's not bad. All right, but anyway, so you see the Franc is revving up. Let's look at some other pairs with the Franc. Let's do the Canadian dollar and the Franc. Let's see how it's going. All right, got some bullishness coming in. We got 3 green candles, and of course later today, market should open up. So we'll see what this next candle will be like. This could be a head and shoulders pattern. We got to check this out, but we do know we see some temporary bullishness in the market based off of this particular pattern. All right, so we could, since we got these bounces, we could get up into this area, but we'll see. Still got to break out this triangle. All right, let's just do. Let's see what it look like against the yen. The yen is what, a safe haven too, right? So we got some bullishness that came in, but we were bullish. So remember when we started talking about potential war, here we go. We got all this growth. So when that happened, you got some of the people who understood the assignment, and this grew to 114 pips. That's a lot of money, right? Now we got a classic little pullback, but what is this pullback to? This pullback is nothing but market structure. You see right there? It's market structure right here. It's a structure. All right, we got a what? Retest. We bounced off. Okay. So we could be looking still some upside potential with this trading pair for the most part. But if you notice, all the way from September all the way through, we done had some impressive growth. But we have to see what it looks like for the yen. Maybe the yen will now become a little stronger, and maybe we will get some downside pressure. We won't know until we violate some key levels as far as this trend line. We need to break and close above or be below this trend line before we really can start talking about some bearish pressure. Let's see how this would have looked. If we want to go back in real time, I'm sorry, we'll go back in time. Let's do this. You know what? I want to do this. Hold on. I got something else. Let's do this. All right, so watch this. All right. So remember, we'd have had this trend line. We want what price to close below. Can we start talking about some bearishness? If not, we're looking at some continuation to the upside. All right. So price what closed below this, and then we'll be looking for some retests. But we would possibly start looking at maybe price going lower. But we did get a break. Probably already got a retest too. But let's see how this plays out. All right, look left. What do you see? Remember, this is market structure. So what happened? Price came back. See that? So this structure area, this is what? Resistance. Price broke, and then it came back to retest. So what are we doing? We're looking for what? Buying opportunities now because it's a retest. We only going to look for maybe some selling opportunities if we do violate this mainly. Although this trend line up here could suggest, but you have to also look left and say, hey, this is really truly the main area of support. All right, so let's play it. All right, so there we're back in real time. All right, and you see when we look what left again, we see we got some market structure here, so we're gonna see how this plays out. But for the most part, we would probably only be looking to go short on this particular pair if this is violated. Other than that, we still could be considering what we call an upward trend. We got what? High, lower high, higher high, lower high, higher high, lower high, higher high, lower high. All right. Remember, that's an uptrend. All right. So let's look at the USD. Right. So this could be considered a flat pattern as well too. More like a pennant. All right. It's the target. If we break out of this pennant, so this is what we're looking for there. All right. So why did price turn around right here? Look left. We have market structure. Market structure. All right. So that's why you always have to look left. All right. Look left, market structure. Sometimes we have something called clean traffic. All right. So you look down here. All right. We get a bar elimination right here off this red. All right. You look back up here. What do you have? Market structure. So what will we like? Watch this. Let's do this. Okay. So let's pretend like this is now. All right. So what am I looking for? All right. I would be looking for buying opportunities, and I would say when if this level is violated, I'll be looking for buying opportunities. If this level is violated, I'll be looking for selling opportunities. So let's see what happens. Oh, and if it violates this, where am I going to take the trade? All right. I'm going to take it back up here in the market structure. So we'll look at that right up in here. Some people may want to take it up this far. I will put it up here just in case for some folks. But for me, I'm going here. All right. So let's play. Let's see what happens. All right. Can you stop it? All right. We're in the trade where your stop loss. The stop loss goes below the counter that was eliminated. Now we're on a daily chart, so it's going to be a little different. Okay. All right. So we're in the trade. We still want to get up here. All right. We're pretty good. Stop losses are set. Once again, since you're on the daily chart, you got to make sure you got a decent lot size. So if you're entering here, all right, and it's stop loss is below here, I mean that's a 53 pip stop loss. So you definitely, if you're trading on this type of time frame, you need to make sure your lot size is correct. If you're using a standard, that's $530 that you'll be wiped out. However, if the trade goes correctly, you will make $1,730. All right, but like I said, make sure your lot sizes are correct based off that type of movement because you're on a higher time frame. So the pip movement is going to be totally different, going to the opposite direction. All right, let's go ahead and play it. All right, so our targets are hit. So I'm just letting it play out. But you see it was hit right here, and it's based on that. So I'm going to go ahead and just stop this. But yeah, so right now we're looking for this level. This level's is broken out of this pennant pattern. We're gonna look to take it up to here. All right, look at that Bitcoin on USD on the daily chart. So why did price turn around right here? Look left. What do we got, guys? Market structure. Gonna make this game harder than what it needs to be. All right, at market structure. This is what? This is the what? Support. I'm sorry. This was support. Yeah, and then what? When support is broken, it becomes what? Immediately the new resistance. So what happened? Price came up, we got rejected here. Okay. So can we go lower? Of course. Can we come back and visit these levels? Of course. All right. So this level has to be broken. All right. Can it be broken? Yeah. Um, we have this level right here. So why did price turn around right here? Let's look again. What do you have? What was this? This was what? Resistance. When price is broken through the resistance, it becomes a what? Support. So why did price start right here? Support. So can we go higher? Absolutely. Yeah. Maybe if we go on a different structure, we may see an inverted head and shoulders. Let's check it out and see. It's not the best. But maybe we can look, see. 4 hour, nah, not really too much on the 4 hour. We got a double top on the 4 hour though. All right, price playing around, and let's go ahead and clear all this out. This is what we are looking at. We have that. All right. So what are we looking for? We're looking if price breaks below here. We may be looking at some potential bearish pressure to the downside for the most part. We also could take it from here. All right. We need to break this level, of course. And somebody maybe could argue that this is a head and shoulders. Got the left shoulder. This whole thing's the head and the right shoulder. And then you got the neckline right here. So if we do break, we'll maybe test the neckline, and we come back down here. If that would have happened here is what we're looking at. We're looking at this. So we're looking at price possibly coming right back up. See this area right here? This is what? An area of what? Resistance. It hasn't been retested, but this would be completion of the inverted head. The regular head and shoulders. Come back down to this market structure. However, we also have this level that it could test first, and it could respect. All right, so this could be a level that price can come back down. All right, so watch this. Let's look at some potential confluence. Confluence here. All right, so this is a level where price were based off the impulses on that. Down here at the bottom will be the extreme. Okay, now let's do our other confluence. All right, we want to do Fibonacci retracement levels. We want to bring it up. Okay. All right, so this first level falls at the 38% retracement level. The next one's at the 50. And this market structure area is at the 61% retracement level. All right, so we had those levels that price possibly could come back to. So these are the levels. If we get bearishness coming in, and the way these patterns are shaping up, it look like that's a possibility we could be dealing with. So I want you to look at this pattern right here, and I want you to look at this pattern right here. All right, they look sort of similar, not 100%, but similar, right? All right, and then look what happened. Go to the downside, and then we rally up. So it's possible we come to the downside and then rally up. All right, I'm not gonna keep y'all long. Those are just some soft analysis I was just doing. I hope y'all enjoyed the video. Hit the like button, subscribe, share. All right, y'all have a great Super Bowl weekend. All right, have a great one. Peace out.